Hi, welcome back, friends. So, yet another video, and we're going to analyze the Nifty and the Bank Nifty again for the coming week. Today is the 28th of July. We're sitting on a Sunday evening, and we looked up the charts, and we're going to go back and see what we analyzed in the last week, what went on to the charts, and how far were we close to what we thought would have been. And yeah, we saw something different in this week, on the last day of the week, and what's in store for us in the coming week. All that with the intention of giving us markers, roadmaps as to when the price goes from a particular point to a particular point. What are the important levels? When we switch our trajectories, we give you three trajectories, if you remember: the bullish trajectory, the sideways trajectory, and the one that's in the red, which is the downward trajectory. We look at all the three possible scenarios. We mark out the levels from where, within what range is where we're going to remain, within which trajectory. And the moment we cross the thresholds, we go into the next category and what are the other markers that we can go to. So we are talking about where to initiate the trade and where to level out, or where to target out. That's the essential importance. We want to get the maximum squeeze of our trade. So when we buy, we want to reach where its target is going to be on the top. When you want to sell, we want to reach where its target is going to be at the bottom. We don't want to get down in the middle. We want to have conviction in our trades, and we want to trade from level to level. That's the gist. So without wasting more time, let's get on to my screen. I'll share the chart with you, and we'll take it from there. Let's go. So we're going to start with the Nifty. We look at our projections. We expected the markets to be a little weak once the budgets didn't give us what we required them to give us. And till the end of Thursday, we were quite around what we projected, around the red path that you see, which was the one that I thought would be the one that we would get, because we'd moved down with the news on the budget and the speech after this FM speech. But to my amazement, we've done something really well on Friday. We've just gone beyond our expectations. And the first thing that we did was we moved out of the red. I in fact tweeted on Thursday that we could be moving out of the red. You can go and check my tweet. And we went on to go into the yellow zone. The yellow zone meaning the yellow area of your trajectory. So this portion is what I'm referring to when I say yellow. I'll change the color to this as yellow. This was a trajectory that we should have expected during that period. This should be marked as yellow. I'm going to change this to yellow. This is what I thought would be, but voila, we changed direction and we kept on going. I was expecting that we get some kind of a resistance here. This is 24,000. I'll make a mark here. This is 24,757, and I thought this would be some place where we would again get some downside, but we went berserk on Friday. Post that afternoon session around 12 in the afternoon, we kept on going up. And now we are on a trajectory which is very close to what I predicted could be the next resistance, and that's 24,900 or 950. So we've gotten to 24,929, and we are inching towards that magical 25K figure that we spoke about. This is all that happened in the last week. And now what do we expect? So now the trajectories have to change. We have to look at the current situation and see what are the important levels that we should be considering. So I'm going to just draw these back up, and I'm going to choose these lines and take this forward, and I'm to bring these areas into focus. We're going to move forward with what's happening. So things are going to be around the same levels that we discussed. The levels that are going to come into play could be any of these. And then, yes, that ultimate figure that I've been projecting that we should get to 25,300. That's my target. That's my long-term target in the current scheme of things. So I'm going to use the white tool now, because this is how I think Nifty can going in the coming week. So I expect the Nifty to open a little higher again. So this is going to be a white tool. This one's going to be a white tool now. I'm going to change the color later. So we are expecting, let's see, we'll change it to white. So I'm expecting Nifty to go higher. Let me do it again. I'm expecting Nifty to go higher. Let me do it again, please. I'm going to delete this and I'm going to go to my zigzag tool. And I'm expecting Nifty to go higher, an inch closer to that 25,000 figure in this period. Now, this is my scenario 1 for the current period. Let's go to scenario 2 now. Scenario 2 is that we begin to start consolidating a bit after having reached here. So we then open up a little gap up and then we start coming down, and then we start to consolidate between these portions. This would be my second scenario, and this could be something that we could say can happen, because if the market decides not to go up right away but take a breather, there's something that can happen, and this would be my yellow scenario. Yellow scenario is a sideways movement that we think it should be. And the third scenario that can even now build up is also possible, because what happens is generally the operators create traps in the market. So like they trapped all the sellers here by taking the market up, and look, because the sellers were trapped here, they had to exit their shorts, and the more they exited their shorts, the more this short covering rally took place. So when the sellers, the bears, realized that it is not going to go any further, they decided they had to break out. They had to change their trades, and they had to start looking at cutting off their short trades, and that's when the market zoomed up, because that fueled the movement that you saw on Friday, and it just catapulted up, and that short covering gave a very huge run on the top. But now again, there's a time that these same market movers can trap the longs now, so they can trap all the people who have become so buoyant, and they can trap the longs. So the third possible scenario that most of us do not think can happen is also probable, and we might get a move down, which can then take us sharply below and take us back to these levels where the market had begun to move up from. So this is going to be my third scenario, which is going to be the red scenario. This is what can happen. Now again, the important levels have been marked. I'm going to mark this level 2, and this is the one that we can mark here. These are the important levels from where the markets can take us from one level to the other. This is one more important level which you can mark, which can be a road marker to the longs that we're going to take. So with this said, what I'm going to do is I'm going to give you 3 seconds, and I expect you to take a screenshot of these levels, because the markers are, when we go higher, we will need to check what is happening here and then proceed to this, or we could look at something that can fail. We can again look at this level and see if anything below this. We should be targeting the 24,738 levels from 24,929. If we don't spend, if you don't spend time here, if you don't sustain these levels and fall below, then 24,500, 24,300, these are the figures that we can see. So, I'm just going to give it 2 seconds, 3 seconds. 1, 2, and 3. You can take the snapshot, and I will switch on to the next chart that we look at. We will look at the Bank Nifty now and see how the Bank Nifty did in the last week and what's in store for us for the coming week. So this is the Bank Nifty chart, and we have stayed in the red. Unlike the Nifty, we've not seen a breakout on the Bank Nifty, but it's not been weakening. But yes, it nearly tagged the low end of the range, and I was expecting this low end of the range. It did tag, not in the later part of the week, but right in the beginning part of the week. And what we saw here is that we have done some kind of a revival from those bottoms, and we formed a double bottom. And yes, I think that going forward, we could be looking at something higher. So what I'm going to do is I'm going to use the zigzag tool. I'm going to take the first probability that I think what's going to happen. I expect the Bank Nifty to remain sideways in the coming period. So that's my first path that I think most probably is what is going to happen. So my Bank Nifty trajectory, which is the sideways path, is the first thought process that comes to my mind, is what can happen. Now, obviously, the second thought process is that it can go higher. Now, if it goes higher, what we're going to do is we're going to move in this direction. We're going to take some support back with a little bit of a profit booking and then move higher. And if we move higher, this is the range that I expect the Bank Nifty to take in the coming days. If we are bullish and remain bullish on the Nifty, the Bank Nifty will also be a little bullish, but I expect the bullishness to cap out at 53,000 for the moment. 53,000 is my best case scenario for the coming moment. So I'm going to get rid of this scenario and I'm going to get rid of this scenario for the current week. So now we're going to look at these two scenarios. And then we also have a third scenario where if Nifty breaks down, so will Bank Nifty. And what are we going to see? If Nifty breaks down and so does Bank Nifty, we probably will have a little push to the top on Monday to start with, and then things might begin to go bad, and we might peter around this sideways consolidation for a bit, and then we might just break off and go lower. Now, this is something that is a third possibility, in which I feel is a third least of all the probabilities, and this is the red scenario that we could look at. I'm going to delete this scenario for the moment, so we have a current perspective on what we are looking at in this week. So these are the three scenarios that we see on the Bank Nifty. With this, I'd like you to take the snapshot. You can take the snapshot. I'll give you about a count of 3, and you can take those snapshots, and then I will switch off from this screen and talk to you a little about what and why this is happening. So 1, 2, and 3. I expect you. So guys, this was our analysis on the chart for the Nifty and the Bank Nifty for the coming week. Now, I need to give you a little bit of an insight into why we do this analysis. Like I mentioned in the start of the video, markets will move from level to level. And why would they move from level to level? Because the markets are not moved by day traders and small-time retail traders like us. It is moved by institutions. And institutions, while they trade on a small basis, on a day-to-day basis, but their major trends are, and their major trades are on a long-term basis. Now, the levels that are created on the charts on a higher time frame are all created by these long-term moves. And that's the reason when the markets have to move from one location, one level to another level, these locations where the major trades have been taken on a longer term basis are the ones where the market is going to, go and stop, or where it'll reverse from. But there are only two things about it. Either it'll reverse from a particular level to the top side, or it will reverse from a particular level to the downside. When it stays sideways, it's all a period of consolidation where either somebody is distributing or somebody is consolidating and building positions. So we, for a longer time frame, these consolidations are the sideways movements that we talk. And when the markets start to, take a journey up, is when the expansion of the markets take place. And that's when the big players start taking their bets and creating positions to take the market higher or lower. So the levels are important. And the idea is to know those levels and see which level, when crossed, is when the trajectory changes, and when to expect a movement from the market in which direction. That's the idea of doing this analysis. And I hope you are watching this analysis. Yeah, there's more depth to that. There's very time that I get with you on this small videos. And I have a program where we can engage, where you can engage with me for a longer length. So I have a few channels where I share my day trades. These are futures trades. And I give levels from above which you need to buy, below which you need to sell on a daily basis on 9 charts: Nifty, Bank Nifty, Fin Nifty, copper, crude, gold, natural gas, silver, and zinc. So there are 9 charts you get every day with markers of buy above or sell below. Markets open, if they're above the buy above level, you buy, and there are 2 targets on the top. The markets open below a particular level, which is the indication that you need to sell, and then you sell with 2 levels, 2 targets below that sell level. That's a simple strategy. You don't need to know any technical analysis. You just need to follow a line, take those markers, buy and exit at the given target levels. That it can't be easier to trade than this. And believe me, on Friday, on the Nifty, a simple buy above, sell below strategy gave us 500 points. 500 points in a single day. That's more than 12,500 rupees per lot of margin on a Nifty, which was an investment of 96,000. So you got a 13% return. But yes, 13% return was the overall return. If you'd have followed my trades, you'd have probably gotten out at 8 to 9%, because 8 to 9% is a huge amount of money. So if you want to learn, learn to trade, fine, do that. But in the meanwhile, start making money from whatever you're getting. So if you want to start making money without getting too much into learning, learn a little, start earning from today, and keep your learning, keep learning going on, but start making money today. That's the reason why you are coming to the markets, because you want to make money. So if you want to make money right away and keep learning, join this program. It is called the buy above, sell below strategy. I'm going to add my link, add a link under this video, and you can invite yourself to a 7-day free trial to that video, and you can have a look at that strategy and do some paper trading, convince yourself, and then maybe you can subscribe to that, and you can use that strategy to make money every day. And yes, we have a few courses where I share knowledge as to how I read the charts. So I use 2 or 3 ways of reading the charts. I use the volume profile. You've seen in my analysis, I use the volume profile. I use liquidity as a concept to where the trades will originate and where they will be ending. These are held. These are caused by liquidity levels on the chart. And if you understand those liquidity levels, you get the maximum squeeze out of your trades, because you start at the right place and you take it to its max run, and you can get out only where you then have the most probable chance of that trend reversing in the short term. So these are 2 things that I use, and there's a third concept which is called the fair value gaps. I have learned the fair value gaps in the recent times, and I'm using it, and it is helping me a lot. And I'm sharing content every day on my channel, and I look forward to build a community of traders who can can level up and learn more from all the knowledge that is there. I will probably bring in all that knowledge and make it easy for everyone to understand and deploy them in their trading. That's the intent of my channel. So with that said, we'll end the video here. Look forward to engage with you more often, and keep looking at these weekend analysis programs, and I'm sure you're going to take advantage of the levels that I present. So look forward to seeing you in the next video. Like always, like the video, share it with your friends, comment if you think that there's something that I can help you with, or what value you're getting from what I'm doing here, and that encourages me. So I look forward to hearing from you and engaging with you as often as possible. Thank you for giving this time, and have a good week of trading. Thank you.